Hello all, welcome to the world of risk. So today we have a very interesting topic. It's called types of risk. So this topic is important because it is asked in almost all of the job interviews or MBA exam or maybe quizzes or any competitive exam. This is a very important topic for all those. So please stick to the end of the video. See through the whole video. You will get some insights. And please let me know if you need any detailed explanation in any of the risk because this will be a quick video where we'll just brush up through the types. Any detailed video, please do comment down. So let's get straight into it. So types of risk. So here what we are going to cover is the risk that a organization face or a corporate face day in and day out. So we have classified basically risk into four types: the market risk, the credit risk, the operational risk, and the strategic risk, reputation and business risk. So we'll go to one by one. So market risk. So what is market risk basically? The risk of losses or gain of financial investment caused by adverse price movements. This is the basic definition of market risk. Now what does this mean? Let's say whenever there is an increase in the investments or decrease in the investments where the pricing or where the market movements are adverse, then this kind of risk comes. Now market risk depends on the underlying asset. So say for example, it is again defined into four categories: the equity risk, the interest rate risk, the currency risk, and the commodity risk. So from the name itself you can say that when there is a fluctuation in the interest rate across the market, then the interest rate risk arises. When there is a risk in the currencies, when the price of one currency goes up in respect to the other, the price of another goes respect down in respect to the other. So currency risk is present. So commodity risk, so where precious metals or any commodities like agricultural goods and everything, the price fluctuates or the demand fluctuates, whatever it is in the market, there is an adverse movement. So the risk is associated and generated from this. So this is what market risk is in a quick glance. So we'll go to the next risk is the credit risk. So credit risk is again a very huge area. There are countless jobs, there are countless opportunities in this area itself. In market risk, you have countless opportunities. So, what is credit risk in a nutshell? So, it arises from failure of one party to fulfill its financial obligation to another party. So this is the basic definition of a credit risk. So credit risk is again like say there are two parties in a transaction. So if one party fails to pay or say the other party fails to uphold the transaction where they were supposed to give any goods but they did not give any goods. Here the parties have failed to fulfill the obligations. So this is also known as counterparty risk. So this credit risk has also the counterparty risk, the settlement risk, and the Herstatt risk. So these are again big topics. Please let me know if you want to make any videos on them. So credit risk, please remember credit risk is driven by probability of default, the exposure amount, time of default, and the recovery amount. So keep in mind this comes very often. What are the characteristics of credit risk basically? So what does this mean? Probability of default. If there is a chance of default, then only the risk will arise. If there is no chance of default, there is no risk. The exposure amount, say if you are exposed or if you are to lose say $100 million or say 1 crore rupees or 10 crore rupees or 100 crore rupees, depending on the credit risk is kind of present. For say if you are losing 1 rupee, the risk is low. If you are losing say 100 billion rupees, the risk is more. Now time of default, when is the default happening within the life cycle of the deal or trade or whatever, or the organizational contract, whatever? If it is starting, is it is happening in the beginning, is it is happening in the end of the deal, have you received anything after that it has defaulted? So this also depends. And again, recovery amount. So if the exposure is say $100 million and you are recovering $100 million, then there is no risk because you have recovered all the amount. So please remember it depends on these four things. Credit risk is again further divided into downgrade risk and bankruptcy risk. Downgrade risk is where your ratings or your eligibility or your credibility comes down. And bankruptcy risk, from the name itself, where you are or the organization goes bankrupt and they file a bankruptcy. Now, operational risk. This risk is becoming one of the major challenges in our organization and it is gaining momentum. We have so many openings, so many opportunities, so many career paths in this particular field. So, this is the risk of loss resulting from inadequate or failed internal processes, people, system, or from external events. So this event is classified, or this risk is classified into anti-money laundering risk, cyber risk, and model risk. Now, from the name itself, you can see that anti-money laundering is again a very vast topic. There are it's covering so many things. Cyber risk, as you know, day by day, cyber risk or the cyber threat is coming more and more into the world. So we need more and more people who know about cyber risk. And model risk. Let me quickly explain you what is model risk. So what model risk is that every institute uses certain kind of models or predictive model to predict, to plan, to say there is a organization which delivers goods, so they will do the capacity planning or they will go ahead with planning of the goods, the how many customers are there, what is needed. So certain models are used in any organization. So if these models are not robust or up to the mark, then there is a chance of failure. So operational risk is this kind of losses. Now let's come to the other risk, that is business strategy and reputation risk. So business risk deals to day-to-day worries of the organization like customer pricing, like demand, pricing decisions, supplier negotiation, competition focus, managing product innovation, those kind of things. Strategic risk involves risk associated with decision making, like long-term decision or say human resource related decision or say major capex investment where firms are going and investing huge amount of money in machinery and all those things. Reputation risk involve the risk of losing market standing. So if you have a good reputation in the market, your business is likely to grow. But if your market standing or your reputation is at risk, then the business goes down. Hence, company keeps on monitoring their social media handle about any negative news or whether their employees and directors are into any bad media or anything. So they keep on monitoring. So this is the reputation risk. Now the next type of risk is this is one another kind of risk is the liquidity risk. Now, what is a liquidity risk? Basically, it is the loss resulting from the inability to meet payment obligation in full and on time when they become due. So you have something to be paid, but you do not have the money or you do not have the ability to pay. Then this is a liquidity risk. It also is defined as when there is say a party is interested in trading of asset or anything but cannot do it because there is no one who wants to buy the asset. So this is again classified into funding and market. So funding is, as you know, we do not have the ability to go ahead and fund. Market risk is we do not have enough market participants to go ahead and trade or do anything, those kind of things. So this is a liquidity risk. So guys, that's it for today. And thank you for your constant support. So we have reached a big milestone of 130 subscribers. So I'm really happy for it. Thank you for showing the continuous support. Please keep on subscribing and spread the word. We will definitely make this channel a hit and I'll cover all the topics that you need. Like this video and share with everyone. For the next topic, do let me know what you want, or else we are going to go ahead and see how firms mitigate risk. So we'll go ahead and talk about that topic. So please ensure to watch till the end of this video and spread, keep supporting me. Thank you so much.